Welcome to the summary for the financial report for the 18 months ended 30th September 2020. It's been a very strange 18 months. We had the first 12 months that were normal, we had record profitability for that year, and then we into COVID. 23rd of March, just before our year end, lockdown happens across the UK. We closed our stores. Initially we didn't have essential service status for our pawnbroking, our foreign currency. So we closed all our stores. We wanted to make sure that we could trade in a safe, secure COVID way. And as the guidance came out from the government on how to do that, as they made our service essential, we started to reopen our stores on the 31st of May. We continued opening as we learnt our lessons through our trial stores. We opened in June and we had all of our stores back open in early July when Scotland and Wales had relaxed their lockdown rules. As we moved forward through the year and we get the firebreak lockdown in Wales in October, as we've got the English lockdown in November, as we've got the Tier 4 restrictions in November and December in Scotland, we have stayed open and traded through that period. Because we now know how to operate in a COVID secure way. We're able to protect the customer in our store because we've got segregated tills. We have the benefit of having glass screens that we've had in our financial services counters. So we're able to protect our staff, protect our customers, and therefore that protects the community at large. And that's how we're operating the business now. Staying with the people side of things, obviously when lockdown happened, we furloughed our staff through March, April, May, and then obviously into June and July as the stores reopened. But from March through to July, we topped the pay up of our staff up to 100% of their normal pay during that period. We felt that was the right thing to do, to look after our staff who are highly trained, highly skilled, that we want to retain in the business. And we're grateful to the government for the coronavirus job support scheme, the furlough scheme, because without it, there would have been job casualties. So we're grateful to the government for doing that. As we got into August, more of the staff were returning, and September, and as we are now and trading today and through the lockdowns, we utilised the flexible furlough scheme because in lockdown there's less people on the high street, but we need to offer the service. So we offered the service on slightly shortened hours. So while we might typically be open 9 till 5, we were open 10 till 4, and we had the staff furloughed at the start and end of the day. So looking at the finances, for the full 18 months, we made 9.2 million. The bulk of that 8.5 million was made in the first 12 months. So good year, good start to the year, the good first 12 months period. And then the second 6 months we've been able to trade profitably with the government support, but we were closed for almost 3 months. Then you go through our income streams. Pawnbroking, solid, has its own story about the customers' repayments and then been closed. And whilst we were closed, people obviously couldn't borrow through the stores and didn't utilise the website that we had where they could post goods into us and borrow, but they just didn't have a need. So from a pawnbroking perspective, what's happened is customers were still able to repay, and they've been repaying their loans at a better rate than they've historically paid the loans back. So that's therefore had a reduction in our loan book. On a foreign currency side of things, obviously international travel has been severely restricted. The quarantining, the air travel corridors, all those things have had an impact into our foreign currency. So typically we operated in July, August and September at about 20% of the normal volumes. But because of margin management, we were able to increase our commission to be 30% of where our volumes, of where our commission normally is for that period. So severely restricted, but still there is some foreign currency transactions happening. And foreign currency will be a tap. I think as soon as people can travel and can travel unrestricted now, whether that's test and release, whether that's a reduced quarantining period, or whether it's a open air corridor, there is a pent-up demand in the UK consumer to go on holiday. From a gold mine perspective, the gold price has increased by 50% in sterling terms over the 18-month period, so gold has been very strong. we buy gold off the customers, but we buy a lot of gold. A third of our gold that we buy is bought from our foreign currency customer base. With that customer base not been there, then there's been a restriction in terms of the weight of gold that we've actually bought in the last 6 months. I think that'll return as obviously we get the opportunity to cross-sell to that customer base. We'll be able to buy the gold volume that's hidden away in all the jewellery boxes, that's unwanted, and what people might inherit or what might break in the next, in the forthcoming months. But with a reduced volume, reduced profits, albeit the high gold price, better price for the customer, and a slightly better margin in pound terms for ourselves as well. The last service that we have is retail jewellery. And I talked about the UK consumer having more cash in their pocket. They've had that cash in the pocket, say from the holidays, etc., and less clothes spending and less socialising going out. We have seen an uplift in the sales of our diamond rings, diamond bracelets, our Rolex, Breitling, Omega watches. Our jewellery retailing has been very resilient once we reopened from June onwards. And we've had good trade and continued good trade right through into Christmas. We've worked on our staff training, so while staff were furloughed, they all did their training courses through an e-learning system that we have, so we're able to keep our staff skills up to speed, teach them about the new products that we have on offer, and we've worked hard at the presentation of the staff in our shop windows. Some of our shop windows now are far better than they were 2-3 years ago. And the last thing that we did with our store estate, the core store estate, is we've had some relocations. So we've relocated stores, 300 yards up the road, that's taken us from the edge of the shopping district to the centre of the shopping district, and put us into a higher footfall position, which we're able to improve our retail. It'll improve our FX going forward because we're in a more convenient location for the consumer. The money shop stores that we acquired in March 19 were very financial services orientated. They didn't have jewellery windows. So we've used the example of our Altrincham branch. We've changed our Altrincham branch to look from a money shop. We've reskinned it, if you like, initially as a Ramsdens store. We've got the planning permission. We've done the shop fit. And we've got a new store with a strong jewellery offering. And we'll repay that CapEx probably within 18 months because of the jewellery performance that we've seen in the early days. And lastly, online. Online has been an area that we have invested in now for the last 2 or 3 years. If I take us back to March 19, the year to March 19, online sold about 5% of the total jewellery that the business sells. It's now 9%. So that in FY19, that 12 months, sales were around about 560,000. For the 12 months to March 20, would increase that to 1.1 million. And for the last 6 months to September 20, that had increased to 860,000 for the 6 months. And that's also during a period whilst the stores were closed and our second-hand goods were often locked away in closed stores that we couldn't ship the goods to the customer. So the customers, some customers didn't want to wait, but a lot of customers, realising that they were second-hand pieces and unique one-off pieces, they were willing to wait because of the value that we offer the customer. So online has been a great success. To give you a summary of the financial position and where we are for the 18 months. So turnover was up at 76.9 million. Gross profit was 47 million and profit before tax was 9.2 million. In terms of our administration expenses, they were 37 million for the 18-month period. What we need to remember in taking away the noise is in the last 6 months we received the furlough grant monies. That was a deduction to our administration expenses, and some of the expenses are reduced because of their direct expenses of the foreign currency, so the cash handling costs are lower because we're obviously doing a lot less foreign currency. So the costs have been well controlled. The discretionary spending, if you like, the advertising has been controlled. The subsistence and the travelling has all been reduced as a result of the inactivity for the 3-month period. But the biggest thing to remember in the admin expenses is the furlough is a deduction to admin expenses. The overall increase from 2019 to the 12 months to 2020 is purely the increased estate. So it's all to do with the acquired money shop stores from March 19 been in the accounts for a full 12 months. Where does that leave us going forward? So the cash at the year end on the 30th of September was £15.9 million. We have a 10 million revolving credit facility which is completely undrawn. So we have strong liquidity, we have a strong cash position, so we have the ability to if you like, weather the forward look period of what might happen over the next 6 months. You know, the government is continuing the furlough support, so there's obviously that uncertainty, there's the challenges that lie ahead, but we have that good cash base that'll allow us to trade through that and get out the other side and then let us get on with our growth strategy. We also have our gold jewellery that has an intrinsic value, so if need become, you know, that gold jewellery could be melted down for its intrinsic value, but obviously we prefer to sell it because it's helping the retail sales. And the other major asset that we have is our pawnbroking loan book. All of our loans secured by gold jewellery or a premium watch. Low loan to value, approximately 60% of the gold price, so it's a very solid, secure loan book. So despite the profitability, despite the strong cash position, we do have the uncertainty, we do have the challenging times. We are still taking furlough support. You know, we took it in October through the lockdowns, November through the English lockdown, Scottish tiering force. We're still taking the furlough support from the government. And one of the things the government doesn't want to see is a company taking government support and then distributing dividends to our shareholders. So our dividends are on pause, we're keeping the cash in the business, and we're looking forward of how we manage through this period, and then once we're through the period, once we've got some normality, once we're not taking government support, and again we'll restart our progressive dividend policy, which is a very crude, simple, half of the money that we make we'll give back to shareholders, and half the money that we make we'll invest in taking the business forward. As we look forward, our business strategy hasn't changed. We are still trying to improve what we do in store. So the efforts to improve our foreign currency margin are ongoing. Our efforts to improve our jewellery retailing are ongoing. The conversations that we have on with the gold buying and cross-selling that service into our foreign currency basis are ongoing. Pawnbroking, how can we get smarter that we can lend more against goods that are really retailable, that will sell quickly, and have the confidence to lend more. So we're joining all that up and improving how we operate in our existing core estate. The other thing about our core estate is we're looking at whether we can relocate stores. So whilst we have a very flexible portfolio currently of leases, our average lease term is 21 months, and we can be flexible to move a store. When we do want to move a store, we want to move it, as I said, to a higher footfall, more convenient place for the customer where we can generate more retail and more FX into the future. So that's within the core estate and how we wish to grow that part of the business. The second part of the growth strategy is to have more stores. So whilst we paused it through the COVID period, we've started to look at what stores can we open. We've taken 2 previous currency bureau stores. They'll open in December and January. And then traditional stores, the full service jewellery offering, jewellery retailing type store, we're starting to look again. So we have all the research that we did before on the high streets. We'll research those towns, and I would expect us probably to open 2 or 3 stores during the calendar year 2021 as things normalise, and then going back in 2022, going back to our 8 to 12 store growth pattern thereafter to grow our estate. Third leg of the growth strategy is online. We've actually redeveloped our website, launched a new website in October. The new website for the customer had a refresh, if you like, a reskin that made it a little bit more attractive. We improved the search functions for the customer so that they can find what they're looking for a lot easier than maybe they could in the past. We've improved the process of how we upload the second-hand individual pieces. We've invested in additional software to speed up the photography. But the reason for doing the new website wasn't what the customer sees. It was the behind. It was the engine. It was the speed of the search engine functionality that sits there, so that we can get up the Google rankings through the search engine optimization. The final thing that we're doing online is we're going to commence pay-per-click in the new year. We've got high expectations for what this can deliver for us. It'll increase the top line, but also increase the bottom line, increase the profitability. The web team is assessed as a business in its own right, profitable in its own right. We want to grow that profitability. As a branch estate, we only cover 25% of the UK population, and our website sales, 40% of the people who buy off us online don't live near a Ramsdens store, and that's a massive opportunity for us. The last part of our growth strategy is a bit of something will happen. We'll take advantage of what consolidation opportunities might happen in the market. We bought in September 2 loan books off one of our competitors in Glasgow and Edinburgh, and we'll seek to do that. We have the cash in the balance sheet. We're acquisitive. We've always been acquisitive. We'll continue to be there. We'll continue to look for acquisitions if the consolidation, if the opportunity is right for the business. So in summary, we had a great 12 months. We've survived profitably through the COVID period so far to September. We're surviving through that period now. We'll survive through the first half of 2021 in the same way. And then we'll be able to grow the businesses as normality returns. We'll restart the growth strategy on new stores. We'll continue the growth strategy online. We will look to see what opportunities are presented in the marketplace, given the challenges that some of our competitors are facing, not as well as we are. So we're in a good shape. We've got the strong cash position. We'll weather the storm and we'll come out the other side, and we'll continue to grow the business. And as we do that, we'll reintroduce the progressive dividend policy that we had previously.